Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be looking at some of the strongest sectors out there, as well as the general rotation we continue to see within financial markets. More on a technical basis, as we are chatting with T.G. Watkins, Director of Stocks over at Simpler Trading, also editor of the Profit Pilot website. TG, first and foremost, you are always very good at isolating the sectors, the individual stocks that have some of the strongest or at least most opportune trends for trading the long side. As of right now, and I know this changes sometimes week to week, definitely month to month, what are you seeing? What are some of the strongest trends on your radar?
I would say probably the energy sector and the precious metal sector. They have definitely been showing outsized returns, especially when the rest of the market's kind of topping out, flagging, taking a little bit of a break.
Well, within the commodity sector, and the precious metals and energy, there's also the resource stocks. So how are you looking at things like the precious metal stocks or the energy stocks?
Well, if we start with the precious metals, we know that, well, if we start with gold, and this is something that I was talking about with our subscribers and being out on the social medias, that if we look at basically the turn of the new year, 2024, we could see that the monthly or even the weekly chart on GLD, those candle bars with the bodies of the candles were actually staying elevated compared to the last three tops going all the way back to 2020 for gold. And so I was telling people, like, look, it's just a matter of time until gold finally moves up and breaks out, because these candle bars are actually doing fantastically, and that price is flagging quite nicely and then starting to hold these moving averages. And then sure enough, it finally had its streak to where it broke out. And then it had a little bit of a not well, gold didn't pull back. It actually just flagged sideways till about March 20th, something around there. I'm looking at the charts, and then it was able to just move up again. So that was kind of the last opportunity to get a really pretty sweet spot into gold. Up at this point, I feel like we're really chasing it. Of course, things can keep going higher and longer than we think, but it's really tough to want to go be buying it up here. It's kind of the same thing if you looked at gold March 8th, March 7th, 11th, something around there. It then pulled back, and that was your opportunity to get in. Silver, same thing. Silver has been basing for, gosh, let me go back like late 2022. So, a couple of years that it's just been going sideways, and finally you see on the monthly chart, you get this massive breakout. And as I said with gold, you don't want to go chase it too much, because if you look at for silver, if you look at March 18th, that was the high. That's kind of the same thing as we're experiencing today. You don't really want to go chase that, because look, 5 days later, March 26th, that's where it pulled back into the daily 21, and then to give you another shot up. So just to catch those ebbs and those flows, and just don't chase it too much up like that. And then you should be okay. We'll have to see how far this can go. I don't want to go chase it here, and we'll see if there's another opportunity to get in.
Let's take a look at the GDX chart, because gold, look, there's no doubt gold has broken out and kept building on those breakouts to all-time highs. GDX, that has moved to, I believe, a 52-week high, but on the back of that, actually GDX isn't even at a 52-week high yet. But look, there's a lot more upper head resistance here because it's not even at all-time highs. So what's the discrepancy here, especially how you would be trading GDX?
Well, I mean, the same thing. I don't want to be chasing these things too much, because they do have a history of running up high and then pulling back hard. So just got to be prudent with this stuff. It's not very wise to try and chase up here. Now, I could be wrong for a few days. This thing could keep going a little bit higher. But if I were to look at this, I'd probably, I don't know, I'd say it's probably like a 90-10 ratio as far as how much further this goes before it wants to pull back. That's just my opinion. That's kind of how I see things. And I think that there should be opportunities to get in, because if these things are really going to persist for a while, and if they're going to go further, then you just wait for those opportunities. You need to wait for those nice pitches to come across home plate instead of trying to reach for this thing and then strike out.
Well, TG, you mentioned energy, and what's interesting with energy is for a while oil was stuck channeling sideways. It's finally broken above 80 and gotten up to the mid 80s. But these oil stocks kept going up even while it was channeling sideways. I wonder if the same kind of thing can happen with the gold stocks, where even if the gold price was to make a lateral move for a while and just correct in time, could the stocks keep moving up like we saw energy stocks keep moving up when oil stagnated?
Honestly, that's a really hard one to say, and I don't know the oil space too well or well enough to really say that. But I've been looking at the gold miners and the Bitcoin miners. Not that they're anything related, but to notice that the gold stocks or the gold itself, the underlying was doing well, and same thing with Bitcoin doing well. But then the miners were totally getting hammered, and you could see that even with GDX just getting absolutely hammered before this recent move up. And same thing with Bitcoin miners. They're just kind of not doing well, even though today Bitcoin is up quite a bit. And so I don't know. I mean, usually you think that there is more of a connection between those two things, but in both these situations, they've been breaking down. So I don't know then how oil for then oil companies is then relating. I don't know. But if we look at actually XOP and we look at XLE, or if we even look at USO, they are all having very similar patterns. And that basically means that the pullback that we had, call it late January into late January, did finally start to move up, and then it's been pretty persistent since then. And I've been telling our subscribers and our traders for several weeks now. I said, yeah, energy, oil, it looks good. It hasn't broken down over the last couple of years. It actually has just been in a very long-term flag, and this looks like the more legitimate move. There was kind of that first move up. Let's see here. Last summer, looks like June, July, something like that, all the way up into maybe September. And that was kind of the first thing people were saying, like, oh, is this it? And then it started to break down and pull back. And now that this is moving, I like this one definitely looks more real. I mean, XOP looks like it's about to break out anyway, which again, hard to chase it, but it just says that yes, there's some strength here. If we can get a pullback from here, then keep an eye out for that and watch for the next move after that. But this does tell me that this is looking pretty strong.
Okay, very interesting. We have been commentating on how the major oil companies, the larger ones, were performing still very well as oil was moving sideways and it was the smaller ones lagging. But as you said, look at that XOP chart, very close to breaking out to multi-year highs here. Back to GDX, though, in terms of a natural correction and maybe another good buying opportunity, what levels would you be looking at? What moving averages would you be looking at?
Well, a lot of times I like to look at either moving averages or trend lines. And if you look at GDX, there is a diagonal trend line from the upper left to the lower right if you just take the entire monthly chart. And you can see that it's breaking out from that trend line. And a lot of times you'll see that price will want to come and back test that. So if it can break out over a trend line that used to be resistance, it'll then come back down to test the top side of that for support. So if that happens, depending on time, it could, if we look at GDX, could actually come down to, I don't know, somewhere around $31. That's just kind of a thought. And what that would also be is perhaps the weekly 8 EMA. That would also make a lot of sense because right now I'm seeing that price is very far away from the weekly 8 EMA, and that's just for me typically a no-go. I just don't want to be chasing it. I would have been happy to get into it earlier, but at this point I got to wait for something else, and that tells me, wait for that. And I'm trying to think, it looks like the price level, the last time that GDX actually pulled back, the upper range of that looks to be about, $30 and change. And so if we even call that a price level, just from a price standpoint, if price wants to come back down and test the top side of that before it broke out, that would also be reasonable. So I guess somewhere in the $30, $31 range, if it came down that far, I think it would be an opportunity to look at.
Well, TG, another commodity that's really been popping higher the last couple of weeks has been copper. It took a while for copper to finally break above the $4 handle again. It's up in the 420s now. But if you look at something like the copper stocks, the senior producers in COPX, it's kind of like the GDX for the copper space. It just broke to a new all-time high to close the week on Friday. How are you looking at copper and the copper stocks?
Yeah, honestly, they were kind of a surprise. I can't remember the last time that I ever traded copper. I do watch occasionally SCCO and FCX, but holy cow, I mean, I was just never expecting to trade these things. And then all of a sudden, I'm noticing FCX is on a rip, and then SCCO actually just pops and runs. And I'm like, wow, okay. I just wasn't quick enough to trade these things because they are just not on my radar. But they, what else can you say? They're doing well. Usually, they call them Dr. Copper. Usually, if copper's running, that means the economy's doing well because copper, they say, has a direct relationship for building because you need copper wires and you need plumbing fixtures and just copper is needed in building, and so there's a correlation there. I don't know if it's still true today. We have a lot of plastics and other material, but if copper's doing well, that does bode well for the economy as a whole, supposedly.
You are right. That's why they call it Dr. Copper. But interesting to see again. Copper break above $4, but again, it's still off of some of its highs just from early 2022 when it reached over $5. So still some room there, but those copper majors, those are doing very well. TG, let's take this big picture. When you look at the markets, US equity markets, those have continued to mostly grind higher, but a lot of their momentum has subsided here. Really goes back to that whole comment of rotation that we've been talking about for, I believe, the last about 2.5 years, where money's entering the markets and rotating within different sectors. Is that what we're seeing here? Rotation into commodities?
I would definitely say so. Yeah, it's for sure a rotation, and we've been able to catch a few of these things and do well with them. You could see even 2 weeks ago that tech was starting to get hit. I mean, you could see that NVIDIA and SMCI started to slow down. I like to look at FNGS, which is the FANG stock ETF, and you could see that that was going sideways for the last several weeks. And so, yeah, the tech just kind of either got hit or needed to cool off for a little bit. And then we started to see industrials pick up. And so we kind of shifted gears and went into a few of those. I mean, one of our better trades was ATMU. It's a filter company. And suddenly this thing went from, 500,000 shares traded per day, if that, like 300,000, to it peaked out at something like 14 million shares traded per day. And we caught that thing perfectly at $23 and sold the last of it at $32. And it's like, filter company, huh? But hey, industrials and commodities. And so we saw that and rotated into it with the rest of the market, and we're having a great time with it. And then after this, we just got to see how long that's going to persist. And honestly, whenever tech starts to come back, whenever crypto starts to come back too, then we'll have probably an idea of when the high beta stocks are ready to go again. But they've had their moment. We had a really, really strong, 4 months since November. And yeah, we just need to move money around, take profits, put it into other stuff that hasn't moved, and then we'll keep going and do it again.
Well, TG, just in listening to that and thinking about the money rotation out of some of the growth area, it seems like a lot of it's moving into the value. If it's moving in commodities, if it's moving into industrials and filter companies, but if it's moving into really some of the safer stocks, there was also an article out over the weekend talking about for a long time the vast majority of traders were not hedging, but just in the last couple of weeks they've seen an increase in people worried about volatility. Do you think that maybe this speaks to an overall trend of investors getting more defensive, getting out of some of the growth tech names and cryptos and getting into some of the more value focused names?
If I were to give traders credit, then I would say yes, because I think people have been around long enough for this stuff and they see this stuff. They, number one, have a sense for how long things last. And number two, can kind of look around and be like, this is ridiculous. And I mean, you're looking at how much some of this stuff goes up. You've looked at the S&P. It's basically just been crawling up for 4 months, just, doing amazing. And you just think, well, how long can this keep going? And this thing is making new highs and all that kind of stuff. And so I think people look around at that and be like, look, after 4 or 5 months, I'm not going to be buying this. NVIDIA has gone up, SMCI has gone up. Like, we're getting kind of frothy. It's getting a little bit too crazy. And so the smarter traders who are experienced, they're going to start taking their winnings. They're going to take profits and just say, number one, taking money out of that. Number two, I'm not putting money into it. I'm not going to buy it up there because it's just not safe. The risk to reward is too high. And I'm going to go find other opportunities. And that's what we're seeing. And then we let that stuff come back down. And while the industrials move up and other things move up, okay, nice rise in our accounts over there, and then we wait for like Bitcoin to set up again, and or the Bitcoin miners and tech to set up again, and then we just kind of rotate back into it. So yeah, you just got to keep things sloshing around for that reason.
Now, TG, you brought up volume a couple questions ago, and I want to ask a little bit more on how you view volume, looking at some of these moves in these commodity ETFs, the stocks, because look, we saw a spike in volume in COPX, so the copper producers last month. XLE, which has just moved to all-time highs, the energy sector, that's actually been declining volume. And then you look at something like GDX, GDXJ, those have been breaking out, or at least threatening to. Those have been flat volume. How much should we pay attention to volume when we are seeing strong moves higher, but very different volume pictures?
Yeah, sometimes volume isn't the clearest. Like, it's not going to just be as easy as something like ATMU. But I will tell you, when you do see something and it really kind of calls your attention, then you should probably really pay attention to it. And if I use this. You were talking about some of the ETFs. Now, SOXX is the ETF for the semiconductors. And that one, had pretty steady volume all across the board. And so there wasn't too much that you could really use to give you insight on that. But I tell you, if you look at SOXL, and because that is the leveraged ETF for the semiconductors, this is where people then go to get that leverage. And this actually started to speak. If you actually look at this on a monthly or weekly basis, the peak in volume was at the absolute low of that ETF, which was bonkers. I mean, to just how crazy it was that it nailed the bottom on this really kind of told me what was going on with the market. And that was October 10th or October 13th, and that was the low of the market too. And then there was another volume surge October 23rd, 2023, and that again was the low of the market. So I think that if you're going to incorporate volume, you might need to do a little bit of legwork to look around and see if the main thing doesn't tell you, then see if there's an alternative that kind of gives you some clues, and if there's a way to kind of figure some of this stuff out, and if that volume talks to you.
Well, TG, just switching gears to something else we were discussing before we went on the call here, and that is in this kind of environment where you have a higher interest rate environment, a lot of the IPOs that have been coming out across lots of different sectors have kind of been getting that initial interest and pop and then kind of face planting. There may be one exception in this group, but in general, a lot of the stocks struggled. But if you think back a couple of years ago in a low interest rate environment, we just had a flood of IPOs and a flood of new companies coming in and just getting bidded up. Is it a tougher market now for new companies coming to the market?
Yeah, I would say so. I mean, first of all, we all know that 2020 and 2021 was kind of a special circumstance for everything stock market related. Interest rates were low, money was everywhere, the market was going up, people were trading at home. Like it was just super special, and so that was a fun time. Maybe we'll see that again in 20 years. But so now, Silicon Valley and money managers and venture capitalists, they had to kind of lick their wounds and take some lessons from all of that and really dial things back. And then so they're going to do things a little bit more by the books, kind of how it used to be, and just be a little bit slower, a little bit more prudent. But then also we are in a higher interest rate environment, which isn't to say we're in a high interest rate. We're actually kind of back to what is historically normal. We just all are so used to 3 and below that this is feeling weird. And yeah, it's tough. People have to just recalibrate everything. But IPOs are starting to happen again. They are starting to pick up. There is quite a bit of news about IPOs, and there are quite a few big companies that have been coming out. And they kind of have that initial spurt, and then they kind of come back down. And I think that's more of a typical IPO thing. Unfortunately, I do think that they probably take advantage of the general public and get that hype and get people to buy into it, and then they sell it down, and then it has to kind of prove itself. We even saw this with Ferrari years ago when it IPO'd, had a kind of an initial bump for a few weeks and then rolled over and then flatlined for a few weeks, several months, and then finally earned itself. And now it's never looked back. So I just think for me, if I trade IPOs, I tend to let them wait because I need a little bit more history for the charts, and then you can start to see some patterns set up and actually see these things get into gear.
So, TG, broadly, is this a healthy market, considering we do have generally higher rates than, we're used to, but not historically all-time highs by any means, not even close, and we are starting to see a little bit of life in some select pockets, this rotation of money. Do you consider this a healthy bullish market, or is this a concerning, potentially bearish market?
I think it's a very, very healthy market, and so far everything what we're seeing is pretty normal. Maybe things got pushed a little bit far this time on the way up with Nvidia and SMCI stuff like that, but yeah, it's pretty normal. This rotation's good. It's good to see industrials pick up. You look at the monthly and weekly time frames on some of these things, and you could see that honestly, like XLE, it's been flagging for 2 years. That's pretty good. You look at SCCO, it was flagging for I don't know, 2 years. Yeah, a year and a half, 2 years, something like that. And now it's making new highs. This is looking good. We have the kind of things that we need going up. We have tech going up when it's ready. Bitcoin's doing well. Like, yeah, everything is kind of back on board again. You just need to have your timing down. Like, you don't want to be chasing tech right now when they're rotating out of it. So just wait and find the things that are working and then go back into it when they change gears again.
Well, just one more follow-up on the tech. I'd love you to contrast the charts that you see with both Elon Musk companies, the Tesla chart, which was one of the Magnificent Seven and may have gotten booted out of it because it's had a kind of a rough go. But then there's also a new IPO we were talking about, Destiny Tech. and it's DXYZ. These are both two ideas. One is Tesla and the EV narrative, and the other one is SpaceX. So maybe contrast these two charts and two companies.
Yeah, okay. So me just kind of shooting off from the hip. I do think we need to keep in mind that Tesla stock had an absolutely meteoric rise. I mean, it had how many different splits and how far did it go up? And it's really pretty crazy. I mean, I not too many companies that are this big have run this far. I mean, we even look at Amazon and Microsoft and Apple and stuff, and they don't go up like this fast, especially considering their splits and everything. So there could be a bit of that. And Elon, of course, had to sell a whole lot of stuff in order to pay for other things. And so Tesla, in the best sense, could actually just be kind of finding its equilibrium here, and it could just continue to base sideways for a very long time. I don't know. I'm just going to say that. The other thing is all of the EV stocks are really not doing well. Even the Chinese EV stocks, just EVs in general, are kind of not doing well. And so that could be something. And I know Tesla itself is not just an EV stock or company. They do have a lot, but the stock just isn't doing it. I mean, clearly the stock is just having a hard time. But then, yeah, as a DXYZ, I keep needing to memorize this ticker. And this is, again, I got to look into it a little bit more. I brought it to you guys' attention, but I know it's SpaceX and a few other things, and it's pretty wild. As far as an IPO, it's up 300 something percent. I almost wanted to buy this last Thursday, and it's up 160% from Thursday. And I'm like, it's just kicking myself that I didn't get into this because I love that technology and I love following them and seeing where we're going with science and space exploration and these companies. And I would love to be a piece of it. And so, yeah, I'm very much looking into this, but I don't really want to go chase it. I'm sure there will be another opportunity at some point, and so I just have to be patient on this one and figure out another way to get into it. But this one does very much excite me.
All right, TG, always great chatting with you. Thank you very much for sharing what some of your charts are showing you and some of the entry points that we could have still playing maybe the upside for some of these commodities, as there has been a lot of money that rotated into a lot of different commodities and even the underlying stocks. We'll post a link to your website, profitpilot.com, underneath this interview so all of you can keep up to date on TG, learn more about his trading strategies. TG, thank you very much for your time. We'll chat again in a couple weeks.
Great. Thanks, guys.